Bruce, did you have a question?
I had a question. Yes, how do you convert somebody from thinking they're coming in thinking they think they're healthy, but they're really not, and they don't qualify for a term policy? How do you convert their thinking that they come in wanting $150,000, but now we're only talking 30,000 or 25, 20,000. How do you make that mindset? How do you get them?
That's a great question, dude. Seriously, that's a great question. It's always managing expectations. So part of my answer to that is going to ask you a question. What kind of lead was it that you were running?
Mortgage protection.
And they're old, right?
Yeah.
They're how old? 70?
Yeah, 69 or something. Yeah.
Okay. Yeah. So I love those appointments because those are the ones that you totally have to manage a client's expectations on what to expect. And so, going into it, in the ATM, I need to probably talk more about ATMs because we've kind of gotten away from it, but maybe I really need to start teaching it again. The ATM is the Alliance Training Manual. So we got so far away from it, I forgot what it was called. Anyway, the Alliance Training Manual. And the Alliance Training Manual kind of helps us a little bit when you're running into a situation like this, when you're with an older client who, is expecting one thing, but then you're telling them another thing. And so you guys see that, the PowerPoint?
Yeah.
Okay. So when you're going through this, in fact, I'm thinking about cutting it down and making it, it is actually pretty efficient, but there's a slide in here that really, okay. So you're seeing now with the mortgage protection client on a lead. And so during your conversation with them, when you start talking about the product, you'd say, okay, so Joe and Mary, you're probably thinking, mortgage protection, what is it? What is mortgage protection? And, a lot of people, they automatically assume it was that same mortgage protection when they were in their 20s or 30s. Okay, so I'm assuming seeing that with an older person. So I'm going to ask them, so Joe, when did you buy your first, how old were you when you bought your first home? Okay, remember, everything is about questions, like asking questions. And so they'll say, well, I was, 30, 35 years old. And so did they have any kind of mortgage protection on there that you could buy for real cheap and whatever? I was, oh yeah, they had something. And I remember it was like $5 a month and it would cover the mortgage if I died. That's typically what they're thinking this is going to be, same kind of thing, and I go, oh yeah. Okay. So let me explain what mortgage protection is so you can, really kind of get a better understanding with the way the mortgage protection products work today. Okay. So today is a real key word to throw in there. So I go, now mortgage protection, what it does is what you think it does. Typically but it either it pays off your mortgage if you die, or it can pay a portion of your mortgage. Okay. And you can choose your beneficiary. It's portable, so it actually follows you. So the way the mortgage protection programs work today is that if you move to another home, it will follow you to that other home. And that's a tremendous advantage. And then the coverage amount that you get stays the same, the payment stays the same. So the way mortgage protection programs work today, the coverage never decreases like those old programs used to. It would just pay off your mortgage. With these programs, you pay the same amount, but you'll get the full amount of coverage. So should you die and there was, at year 29 of a 30-year mortgage, and, you only had like $1,000 left to pay off on the mortgage, and you wrote for 100,000, your wife, your beneficiary, would get the full 100,000. Okay. So that's what, you know, mortgage protection policy will do for you. But there are other versions of mortgage protection too. So for example, we have what we call split plan mortgage protection. So what we can do is we can cover half the balance of the coverage with a full benefit program, and the other half with an accidental death program. So that'll make it more affordable, because sometimes people, when they look at what it costs to cover their mortgage, it might be too expensive. So that's another strategy, is to do a split plan. And as you know, Joe and Mary, that mortgage protection insurance is all based on your age and your health, right? And I just shut up. So for example, if you're 25 years old, you're going to pay way less for mortgage protection insurance than if you're 75 years old. Does that make sense? I have to get them to say yes. Okay. They say, well, yeah, I guess that makes sense. Yeah. And it's also based on health too, right? So like if you've got cancer and you've had a heart attack, you're probably going to pay more than someone who's perfectly healthy and has never had cancer or a heart attack. Does that make sense? And no matter what they say, they're going to reluctantly agree with you, because it does make sense, right? What you're trying to do is you're trying to manage expectations using this slide. All right. So there are split plans. Here's a great program. It's called mortgage payment protection. Sometimes, in a case where, you're older, and if you looked at what it would cover, what it would take to cover 150,000 on a term policy, it might be $800 a month, right? And because it's based on age and health, and the most you can probably get is a 10-year term. And that's just the way mortgage protection works nowadays. Okay. So what we've done is we created another strategy called mortgage payment protection. And so what this product does is it's super affordable for older people, like in your case, super affordable. It's designed to cover 6, 12 months, 24 months, however many months of mortgage payments, so that your beneficiary, your spouse, your kids will have enough money to pay the mortgage, to keep the mortgage going, so that you can avoid foreclosure, and just keep the mortgage payments going until you can sell the house and get all the equity out of it, or you can rent it out, whatever you want to do, but it buys you time, right? And these programs are super affordable. Plus, they're not term, so they don't end while you're still alive. And that's the danger with buying term insurance, is that it will end, but you're still alive and you need it, right? And it doesn't make sense to have a policy that'll stay in force the rest of your life. Again, question. I got to get them to say yes. So these programs are very affordable, particularly in your situation. This actually might be the solution that maybe we'll talk about. So, and I'm not going to talk about disability or return of premium because it won't apply for them. So I'm going to just not even talk about it. So do those options make sense to you, Joe and Mary? And I just wait for a yes. Okay. So it's important that I say that this is based on your age and health. Okay. So understand what I did. What I did was I just changed their mind about what to expect. Does that make sense, Bruce?
Yes, yeah, that definitely does.
So before I show them pricing,
Right.
I want, and then when it comes to like getting their health and all that, and then I have to do rates, I go, now look, I'm not even going to talk about term insurance for you, because if I show you what it would cost to cover your house at your age and health, you probably have a heart attack right now. So it doesn't make any sense for me to cover those options, because those just won't work in this situation, right? I mean, and I get them to agree. And then I say, okay, so let's cover what I think is more feasible, that will help you budget wise. Is that okay? So I get their permission. Is that okay to show you something that, is probably more affordable for you, that, will provide you some, really strong protection? Again, you got to get their permission. You got to ask questions. selling is not telling. Selling is about asking questions, right? So, so that's kind of how you would set it up. And then you do the mortgage protection payment program. I tell you what, I actually have clients that say, oh, that is brilliant. That is so brilliant. I can afford that. She was like I remember distinctly this woman I covered. We did like a $25,000 policy. I think it was a universal life policy, like Smart UL or something like that. She goes, oh, wow, that's brilliant, Alex. That's brilliant. And I just remember she was so happy. And we were going to cover her son. Her son was the one that she wanted to take care of the house. So it's a really good way to set up the client for, the situation. Is that frame control? It really, that's a great, it is. Yes, Scott, it's reframing. It's about reframing everything. Reframing is a great technique because you want the client to think along the same lines as you're thinking about how to take care of them. You need to have them thinking from that perspective. And reframing is reframing from what they thought mortgage protection was to reframing what mortgage protection is for them that will take care of them. So here's another great example of reframing, right? Oh yeah, this is one I got earlier this week from Leslie. Actually, she wanted to be on, but she is suffering a migraine. I asked her to ask this question. It was about answering objections. And so the question she had was, well, what do I do when someone says they've got plenty of life insurance, they don't need mortgage protection? I go, oh, perfect. That's a perfect question because it totally covers this, reframing. Okay. So I told her the way to answer that objection when you're on the phone is you tell them, oh, yeah, absolutely. Most of my clients already have life insurance. Okay. So what did you just do with that comment? Well, you told that we've got clients that have life insurance too. So you can be a client. This is how I'm telling you could be a client too. Okay. So what you're telling me is, it's not going to work here, So I tell them, yeah, most of our clients already have life insurance, and then they get mortgage protection to cover their mortgage. Now, you know what life insurance is, right? Well, yeah, life insurance. Yeah, if I die, blah, blah, blah. I go, well, yeah, but life insurance is for income protection, right? So typically people buy life insurance to protect income. So, when you die, your family's going to mourn your loss, but they're also going to lose your income, right? Right. And so what life insurance will do is it'll cover a certain number of months or years of your income. So let's say you bought a, $200,000 policy and you make $50,000 a year, that'll cover 4 years of income so that your family can, kind of maintain their lifestyle and figure out a way to change their lifestyle so they can fit within the loss of your income. Does that make sense? So most of our clients already have life insurance. What we're talking about here is mortgage protection. Mortgage protection is designed to cover your mortgage so that your mortgage is paid off, plus you have the income protection at the same time. Does that make sense, Joe, Mary? And they'll say, yeah. Okay, that makes sense. And that's how you answer that question. And then I go right into, so they have me coming out to your area tomorrow. Which is better for you, mornings, afternoons, or evenings, to deliver this information to you? And then you go book the appointment, right? And that's a perfect example of frame control, reframing what they're thinking life insurance is. And you're going to get that from people in the home too. Well, isn't this just life insurance? I go, no, this is mortgage protection. You know what life insurance is, right? Yeah, it's, well, life insurance is income protection. This is mortgage protection. Income protection protects your family against the loss of your income when you die. Mortgage protection protects the loss of your home or prevents losing your home when you die. Does that make sense, Joe and Mary? Oh, well, it's just the same thing. Well, not really. I mean, mortgage protection covers your mortgage. Life insurance covers your income. I'm smiling this whole time. Okay. So that was one Leslie had difficulty with on answering objections. And I say, it is what you tell them what it is. It is what you tell them it is. Right. I mean, you don't want to argue with them. If they start arguing with you, then you've lost anyway. So you're just smiling, you say, yeah, income protection. Okay. And then you just move on. Right. You move on. Does that make sense? So that's another great way of reframing. So does anyone have any other questions? I hope that made sense. Anybody?
I'm sure I'll think of some, but I can't think of any right now.
Okay, that's all right. Well, let me just kind of quiz you then, Stormy. Was it a particular objection in the home that you're running into that why you weren't able to close those?
So I was kind of talking to Andy about this.
Yeah.
One of the ladies, she was a heavy set lady. She was like 5'3", like almost 400 pounds.
Oh,
She
yeah.
took 14 different medications, and there wasn't many options for her. And I got her down. The hard part was she wasn't willing to pay more than $20 a month.
Yeah.
I found her one that was like $20 a month for like $3,000 worth of coverage. We had a really good connection. We talked, I understood, the importance of, it's something is better than nothing. And then still at the end, she just wasn't having it. And then the other fella, Daryl K. Wright, that I talked to you about, which was like the first appointment I ever ran. If you remember right, he was like 74, wanted $120,000 worth of coverage. And he's like 2 years removed from non-Hodgkin's lymphoma cancer.
Yeah.
So those are the two main. And then my third one that I had, the third appointment I ran, Tad already wrote a policy on. So Tad's my problem there.
Yeah. Yeah. Okay. No worries. Okay. So let me just kind of talk about in general when you run into situations with someone who is, and this won't be the last time you run into someone who wants something that they can't have. And that's really what we're talking about here. They want something they can't have. And they're mad, or they're just, well, I don't know why I can't have it, blah, 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 and that's in general what you're running into. So how do you handle situations with someone who wants something they can't have, right? And so the biggest thing I focus on is how much they care about the person that they're going to cover, right? So one of the first things I want to know is, who's going to be the person that has to pick up the pieces when you die, right? And that comes out of our final expense made simple. I think was the big lady, was she on a final expense lead, or was she a mortgage protection lead?
Yeah, she was a final expense lead.
Okay.
And the problem I had with, one of the main problems I had with her was, when I was trying to make that connection with her, like figure out, who's going to be your beneficiary, who's going to pick up the pieces when you finally pass. Her answer was, I don't talk to my daughter, and my son's in prison.
Okay, right there, that's a problem. Don't talk to my daughter. Okay, so look, man, this is all about pain finding, right? Finding that emotional person, the person that they care about emotionally, that they want not to be burdened by their death, right? And so I would just, and maybe you did already, but it's like, so is there anybody that you die tomorrow, who's going to take care of all your stuff? And I just shut up and let her answer the question. Well, I don't know. Wow. Well, I don't know if that can help you, because if you don't even know who would be the beneficiary of your policy that would take care of your final expenses, well, then there's no reason for you to get a policy. Okay. So here's what I did, right? That statement is they call it the takeaway, but I call it the pendulum. The pendulum of going the other way. Like sometimes I try to talk the client out of it. And if they let me talk them out of it, then they really didn't need it, right? But I'll go there and the clients that really need it are going to pull me. They're going to sell me on why they need it, right? So statements like, wow, well, I'm confused then. Why did you even fill the form out? That's a great question. Why'd you fill the form out? Well, I just wanted to see what this kind of coverage is and, maybe, Bob, whatever she says, right? I go, well, I'm confused though. You don't even maybe know who your beneficiary is. So if you don't even know who would take care of your situation, then, maybe you don't need this. And I shut up. She goes, well, then they're going to come up with a name. Well, when I think about it, probably my sister or my whatever, my neighbor, my neighbor and I, we play bridge every week. And you know what? She's probably someone I trust to take care of all my stuff. Okay. See, now she just gave me she just convinced me that I need to stay there for a few more questions. Okay. Because the other way is, well, Alex, you're right. I really don't care. I go, okay, I just want to make sure. I just want to make sure, and then now I might try to sell her something else like a, hospital indemnity but she may not even qualify because she's too heavy. But, so if they let you walk away, then you didn't have anything anyway. So but she might say, well, okay, I think my sister would probably be the one that would, okay. So tell me about your sister. So I'm going to find out how much they care about this person, right? Whoever they say, well, my brother, my sister, my neighbor. Oh, okay. Your neighbor. Tell me about your neighbor. How long have you known each other? So you must be really good friends, right? For her to be the one to take care of all your stuff. Well, yeah, I mean, yeah, she's really a good friend. So she'd be sad then if you died. Well, yeah. And have you named her in a will already? Well, I haven't yet, but I think I would. Okay, well, I mean, you think you would? See, you got to be careful, Stormy, when people use wishy-washy words. It's like it's okay to fool yourself, but it's not okay to fool me. I don't want to be fooled. I want to know exactly what they mean. Okay. And so when people use wishy-washy words like, well, I think, or maybe, or probably, I always repeat that word. So they say, well, I'll probably be my neighbor. Oh, probably? And I'm smiling, right? Probably? Well, I think that, yeah, I think that sounds about, right. Okay, you think? It's so funny because then by asking an additional question, you start refining what there really is in their mind, right? If you don't refine exactly what they mean by what they say, then you're fooling yourself and you're going to you might make a sale, but then that sale will go south and they'll cancel their policy and get a charge back, right? Always try to solidify those wishy-washy words. So she might say something like, well, yeah, probably my next door neighbor. Okay, probably. Yeah, it would be my next neighbor. Okay. Oh, and what's her name? Her name's Martha. And how long have you known Martha? A long time? Yeah, Martha and I are friends we've lived in this house for, 10 years and 10 years. Oh, okay. So you guys get together all the time? Oh yeah, we get together all the time. She's probably my closest friend. Oh, okay. So she'd probably be sad when you die, right? I kind of joke about that, but oh yeah, she would be. She would be. Okay. So you trust her enough to give her X number amount of money to bury you. Like you trust her to do that? Yeah, she'd do it for me. Okay, good. Now, if you trust her that well, then I can probably help you. But so at least you found out enough to move forward. Okay. And then, so does that make sense? Like, it's always trying to figure out who do they care about. If there's no one they care about, then I'm out of there. And that's probably just as well, right? So not closing does not mean it's a bad thing. Okay. So the other guy, the 74-year-old, is a case of what we're talking about, what I told Bruce, talking about mortgage protection and what that's about. And, what typically someone like that who is like, steadfast at wanting to get 150,000 covered, I go, look, Mr. Smith, I mean, you can't squeeze blood out of a rock, right? And there's no way that the insurance companies would cover you for 150,000 for, $50 a month. It's just impossibility, unless you want to do accident. Now, if I can write you an accident policy for that much, but well, if he's 70, I couldn't because there's an age limit, right? But so that's sort of the reality. So for the old guy, I still need to know who the beneficiary is, right? And so finding out who the beneficiary is, who's going to have to pick up the pieces when you die.
That was one of the problems with him also, was it was a son, and his son's a surgeon. So like in his mind, his son has all the money in the world. He don't need any sort of money or any sort of help. And one of the other big issues with him was he already had 6 months of mortgage protection. He had like a $6,000 policy. So like it was even, he wanted like, I think the minimum amount he wanted was like 18,000. So I guess I got to figure out how to push through that, because it's kind of hard if he already has $6,000 of coverage, to write him, even if it's just 1,000 more, that's hard for me, it was hard to convince him of that.
Yeah. So you're not trying to convince them about anything. You just want to know how much they really need it. Okay. So here's where I would exactly go, dude. He goes, well, already I've got 6,000 of coverage. And my son's a surgeon. I go, well, I'm curious. Why am I here then? That's a perfect Sandler question. Sandler sales system. I'm a President's Club member with Sandler, so I know. So the perfect question for that guy is, well, I don't know why. I don't understand why I'm here. If you've already got $6,000 of mortgage payment protection, covers 6 months of mortgage, your son's a surgeon, sounds to me like you really don't need anything extra. Again, you got to have the, and I know you're new, right? So new people, you want to get that first kill. It's one of these things where you got to act like you've been there before, which is hard for a new person because you haven't been there yet. Okay. So I totally know that what that's about. You want to, I got to make my first sale, but you got to be willing to walk away, because you'll make a bunch more sales when you're willing to walk away, and getting them to, convincing them, I mean, so some of the things I'll do, I'll take temperature. Okay. So this is called take the temperature. I go, look, I mean, you already got 6,000. You're paying what for 6,000? And whatever he tells me, well, I'm paying, $80 a month for 6,000 of coverage. Okay. So, you got 6 months covered. I mean, your son's a surgeon. You could probably pay the house off if you wanted, maybe he'll fix it up to rent it. I mean, what do you think? You die, he's got $6,000 to pay 6 months worth of mortgage payments. What do you think your son's going to do with the house anyway? I just shut up, man. And then he'll say, well, I don't know. He'll do whatever he wants with it. Okay. Well, you die, he's probably got enough to cover it. Honestly, the amount of money you'd probably pay the same amount. If you wanted 6,000 more, it probably cost you the same amount, right? If you got that policy recently, how long ago did you get the policy? Okay. And they says, well, 6 months ago. Okay. Well, 6,000 probably, be another $80 a month. That The question is, do you really need $12,000, to leave your son? Like, dude, I am trying to get them to convince me that I need to stay there a minute longer to take care of them, So if they haven't convinced me, I go, there's probably nothing I can do for you on the life insurance side. But let me ask you a question. Is your house in a trust so that it bypasses probate? And then I'd go try to sell them the estate plan, but you don't know about the estate plans yet, but there is a pivot, to other things that we can do for them. But honestly, Stormy, those two cases, you could be Andy Albright and wouldn't close them, right? But the possibility it could have been there if you, kind of pushed the other way, right? In both cases, like, well, I don't know why I'm here. It seems to me like you're fully covered. You got to be ready to ask those kind of questions and suggest to them that maybe maybe I can't help you. Maybe you don't really need any help. And if you kind of are willing to go there, dude, you're going to find the people that you can close. Does that make sense, Stormy?
Yeah, absolutely. And that's one of the things Andy said to me when I was talking to him the other
Yeah.
day was he basically said, he's like, why didn't you do that? I said, I guess I'm too friendly. And he's like, no, you don't care enough about people, and just put me on the spot. And that kind of like resonated with me because I get where he was coming from when he said it. So one more question though. So about the first lady, another issue she had as well was she didn't have a bank account. She only had a government assistant debit card that only had a one-way routing number. So you couldn't use it to do like bank withdrawals from. So you had to pay it by debit card. What do you do in that situation?
You guys help me. We got carriers that will do the Social Security debit card. Was it Transamerica? Somebody help me out here.
Great Western.
Oh, Great Western.
Okay.
Yeah.
I love
AIG.
Great Western.
Yeah.
Yeah, so Great Western's a great go-to product. So you're going to start learning the go-to products for people that only can pay with Social Security debit card. There's another card, isn't there? Like there are companies that'll take a credit card for the first payment, right?
Yeah, CVS.
Yeah, CVS will do credit cards.
Yeah. On the well, if you pass it, you can use a relative's checking account for the first payment, and then you can actually pay cash or a debit card at any CVS location.
Oh, that is awesome.
I didn't know that.
Yeah.
I didn't know that either. That rocks, man. Because they're probably getting their prescriptions filled at CVS anyway. Oh, that is so awesome. I love it.
They get a barcode on a statement every month. They just take that statement in with the barcode and scan it, pay cash.
Wow, that is awesome. So they could use the relatives like a son or daughter's checking account to do the first draft.
Yeah, that's what I was told.
I love it. That's great. That's great. All right, man. Yeah. Okay. So I was there yesterday, or in Pittsburgh. Was it yesterday? I think it was yesterday. And so he went over that whole notion of you don't care enough to be there. So let me explain kind of what that's about. Is that a lot of agents are too worried about being nice to a client, like we were saying, just being nice and polite and amiable, thinking that, people will buy from nice people. Actually, no. People will buy from people they like and respect, and people respect the fact that you care enough about them to ask the hard questions. And so this is where you really got to drill down to the hard questions of getting them to think about what decisions they're making. And one of the ways, and I think I talked about it one of the previous sales calls, is asking hard questions like, you got people who say, well, they think they're going to live forever. It's like when they think about, or when the person says, well, I could just save that money. I could just save that money. And, I'll have enough money in, 10 years to be able to, pay it off, pay my funeral off. I go, so when you confront that kind of attitude, I go, wow, that's brilliant, man. Here's what I want you to do is I want you to call me the month before you're going to die so I can get you covered and your family be taken care of. So you don't even have to put any money away. It sounds ridiculous, right? But that's basically what they're saying is that they know when they're going to die. And so what I'll also do is ask them, let me ask you, do you know anyone that died of a heart attack? And they'll say, well, yeah. So tell me about that person. Who was it? Oh, well, it's my brother or whatever. It could be my high school buddy died of a heart attack. Oh, wow. What's his name? So I always want to personalize everything. You got to personalize everything. So what's his name? His name's George. Wow, George, you knew him since high school. Yeah. How old was George? Oh, he's 57. Wow. Heart attack at 57. Do you have the heart attack in the morning, afternoon, or evening? Oh, he had it in the morning. Right. So here's what I'm trying to do. This is a psychological technique is I get them thinking about his friend. And so I'll go, so how'd you find out about him dying? Oh, one of my buddies called me right away. Wow, how'd that affect you? Oh, I was in shock. He seemed like he was in good shape. I had no idea. Wow. Did he have life insurance? Oh, yeah, he definitely had life insurance. So let me ask you a question. When George woke up that day, that morning, when he woke up, did he know that he was going to die? Again, I shut up. I let them answer the question. Did he know he was going to die? Well, no, he didn't. Yeah. It was sudden, wasn't it? Yeah, sudden. And I just nod my head. Yeah. I'll just let him think about it. Listen, you know, you love your family, right? And you told me that your wife's gonna have to, you're gonna have to come up with the money somehow to bury you. Um, you die tomorrow. Tell me about her situation. What would she have to do? And I just shut up, right? What's she gonna have to do? And then they tell me whatever she's gonna have to do. And if it's not something they want them to go through, then they'll figure out how to come up with the premium to pay for it. But see, you gotta be willing to ask those kind of questions when you're with the client to get them to move, right? And it's questions that will get them to move. It's not trying to be nice to them. It's not trying to be convincing. It's not trying to, all you're doing is asking questions. You're trying to get to the emotion of it, you know. So, you can do it two ways. One way is say, you know, you don't know when you're going to die. You probably should get a policy because you don't know when you're going to die. You might die tomorrow, right? So, yeah, you can tell them that, but you know what? You tell people stuff, they think of all kinds of objections why they shouldn't believe you, even though what you're saying is true. That's why it's easier to ask them questions so that the answers that come out of their mouth is something that they don't object to. They never object to what they're saying, right? They never object to what they're saying. So your job is to get it out of them, right? And so as you get better and better at asking questions, you're going to find your closing rate's going to just go through the roof because you're asking better questions. And that's really the learning curve in this business. Everyone on this call who's sold anything can attest to when you start getting better at asking questions, it's amazing what happens to your closing rate. Right, Scott Mills? Scott Mills is one of our guys that has really learned really good Sandler techniques. Scott. Hello, Scott.
Yes, sir.
Did you fall asleep?
I knew you was gonna say that.
I know, because I'm impressed, man. It's like almost 9 o'clock your time, and what you should be in bed by now.
I know, and I'm at my mom's in Tupelo delivering some things down
Oh,
here to clients, and I just ate about 4 brownies, which I've been doing good for 2 weeks. But anyway,
oh, dude,
I'm hanging on by a thread.
I know, I know. Scott's been he's studied a lot of sales stuff and a lot of the kind of things that we're talking about on this call. Like, isn't that right, Scott, about asking questions and what did you call about questions? Presuppositions, right?
Yeah, presuppositions and getting them to intrinsically adopt a
Wait,
different view and using framing and crossover, that kind of thing.
yeah.
It's all about questions. It's all about questions.
Yeah. So talk about, what when you encounter someone and they're, getting them to think along the same lines that will open them up to doing something moving forward. Like some of the stuff that you've read and learned, what are some things to think about when you're learning how to do that?
Well, it depends on the situation, but probably, like we've talked before, it's going ahead and assuming the presuppositions and supposing that they already know, asking them questions that they don't know, and you know the answer to. What did your CPA or what did your advisor, what did they advise you what did he tell you about the tax consequences when you try to turn this money into income? And then you'll find out, you're presupposing they have a CPA or an advisor and they've been told. And then they'll start stuttering around and saying, well, he really hasn't.
Exactly. So what Scott's saying there is like, assuming that they have an advisor that had advised them properly on their taxes when it comes to retirement. It's like, so tell me, how long have you beat your wife, or have you stopped beating your wife? I mean, it's like there's so many things in that question, right? So when you ask those type of questions, it gives you a lot of information how they answer it. And that's really kind of what you're doing when you're, trying to get them to move. The thing about getting people to move and getting them off the think about it, getting them off zero, you got to do it one way or the other, right? And it's typically done by getting them to think differently about where they're sitting, right? What you're trying to do is you're really shifting the world underneath them because their assumptions, you're questioning their assumptions about something. Like the 70-year-old who thinks this is going to be a $10 policy a month, right? Basically what you've done by asking those kind of questions and making assumptions, when you say, well, that this is all based on age and health, right? So when you're 25, you're going to pay a lot cheaper than someone who's 75, right? You know that, right? What are you going to say? Well, what do you mean? Well, I mean, all insurance is based on, it's kind of like your car insurance. Like, again, analogies kill it. So like, you think someone who's gotten in a number of more accidents and speeding tickets, they're probably going to pay more for their car insurance, right? Than someone who's never had an accident and never had a speeding ticket. Well, yeah, that's obvious. Yeah. Well, same thing with insurance. People that are younger and healthier, they're probably not going to likely to die percentage wise as someone who's older and sick. That makes sense, doesn't it? You just only say, well, yeah. That's another thing is telling stories and analogies. I try to do analogies all the time because analogies also help them to understand, their situation.
Hey, Alex.
Yeah.
Here's another great one. When you saw what age you will run out of money in retirement, what age you'll be, were you happy with that?
Oh, that's a good one, dude. I love that one.
Oh, here's another one. I cheated. I came out here and got my cheat sheet.
Yeah.
When you did the numbers to see how much retirement income your current plan will produce, what did you come up with?
You know what? They probably don't know. They have
No,
no
they don't.
idea.
They don't know. No, they don't know. No.
Yeah, that's a great question. Scott does a lot of annuities and retirement planning stuff. So that's why he's really clued in on those type of retirement planning kind of questions, but yeah, which kind of goes to the thing where the guy, trust me, you're going to get a lot when people say, well, I could just save that money. I'm just cracking up.
Oh, yeah. Yeah.
The one that will just kill you is when he goes, well, my wife will probably get married to someone that'll take care of her. So sometimes what I'll say, if I'm feeling kind of ornery, I'll ask him, well, why don't you just, are you going to let her have an opportunity to kind of shop around before you die so she knows who will take care of her? No. What were you going to say, Scott?
I was just laughing at a joke about the guy said, baby, when I die, I said, you ain't gonna let no man drive my truck. She goes, no, I would never do that. I said, baby, says, if I die, I said, you wouldn't let no other man live in the house, sleep in our bed, would you? I said, no. I said, if I die, I said, you're not gonna let some man use my golf clubs, are you? And she said, no, no, he's left-handed or something like that. I forgot the joke.
He's left-handed.
Or no, those are left-handed clubs.
Oh, that's too funny.
I've messed it up, but you get the gist.
Yeah.
It's past my bedtime, man.
I know. Well, so those are techniques, and yeah, we don't want to totally muddle your head with stuff, but be curious. The whole idea of questions is be curious about people and why they say what they say, right? Always ask a question to answer a question. So when they ask a question, so Alice, does this have that return of premium thing program? Huh. That's a good question. Why is that important to you? So normally when guys hear that question, the return of premium question, they'll go, oh yeah, oh man, it'll pay all your money back and it's a great savings program and blah, blah, blah. And they go, oh, okay, you're one of those agents. Okay. Well, I'll tell you what, we're not interested. Why don't you get out of my house? You go, you're going, what the heck? Well, the reason is because the previous agent tried to sell them hard on a $200 a month policy with return of premium. And the guy would just kept going on and on and on. And the guy said, oh, we don't need that. We just want to cover and blah, blah, blah. And so you don't know that's experience that he had. So you want to know why they ask every question they ask. So that's a great question. Why is that question important to you? Well, the other agent that came in here, all he could talk about is return of premium. It's too expensive. We couldn't afford it, but he just kept talking on and on. And, he's really trying to close us hard. And we just didn't want to do it. So if you got one of those programs, we're not interested. And I go, oh, he's one of those agents, isn't he? Oh my gosh. That's been going around here. These agents that have been trying to strong arm people into this, what they call return of premium. You know how they're paid, right? If they can jack your premium up, they get paid more money. You know how that works, right? Well, yeah, I guess. That's why he's trying to, squeeze $200 out of you. Yeah, we're not here to do that. Well, my job is to get you covered at something that you can afford that you're happy with. That's my job. So now we don't do that to people. So again, that's reframing. You're saying all those people do that. All those, we don't do that. All those people. So you can talk bad about those people. And then, we don't do that. All of a sudden, now you know why they asked the question. So you know how to, respond to it. Okay. So always answer a question with a question to find out why they're asking it. Now, if they insist on you answering their question, then answer it. But always be curious. So the whole thing with asking question is being curious, understanding why they're in their situation, finding out who their loved one is that they care about. Why do they care about them? What is their relationship? Why would they be hurt if they died? Just really focus on those reasons to ask the questions you're asking. I'll tell you what, man, you're going to step closer and closer to being, a great closer, because you're taking care of them by making sure that they really want the policy for those emotional reasons. And again, like I said, Stormy, maybe those people, no one could close them, but for the ones that you run into, and you haven't run enough appointments. So as you start getting more appointments under your belt, then you're going to start really understanding what I'm talking about. All right. So that is 10 o'clock. We figured out how to stretch out some more time, but thanks everybody for being on here. I hope that helped. Stormy, that help at all?
Yeah, the way you explained it was really clear. I actually like that. It was one of the more clear ones that I've heard. So I
Yeah,
appreciate that.
no problem, man. So let me know if you need help in any of those appointments. All right.
I will probably call you I will most likely call you from the home tomorrow. So
Okay. I know they got on your case about it. So
yeah.
I'll be happy to text Andy. Hey, Stormy called me. You definitely stuck out in his mind. But anyway, all right.
Well,
Dan.
hopefully that's a good thing, man.
Oh, it is. I told him, I told him in the meeting in front of everybody, because your name came up, and I said, hey, he's grateful, dude, that you helped him. I appreciate that. He goes, oh man, he's a good guy. He's a good guy. So so he liked you anyway.
Yeah, he thought it was he I told him that. He's like, why'd your parents name you Stormy? I was like, well, my older brother's name is Rainy. He just looked at me, he's like, I like your parents, man. So,
I know. He mentioned that too. It was pretty funny. But so man, we gotta get your name on the leaderboard so you can say, yeah, I helped that guy.
yeah, that's my goal, man. So,
All right, dude. Well, I'm here to support you, and we'll get you more leads, whatever we need to do to get you rocking and rolling, bro. Serious about that. And
All right.
like I said, you're coming down to Louisville. That's
Yep.
gonna blow you away, dude. Seriously.
Yeah, I'm excited. I'm excited about it, especially after seeing Mike Leventovich talk at the meeting with Andy. So
Yeah, absolutely. So cool. Awesome, man. We all take care. God bless, and we'll see you.